Well, the M&A market, buying and selling of companies and businesses, it's completely gone into hibernation. Buyers have just stopped and had a look around.
Stopped investing.
Yeah, they stopped buying, they stopped investing for the most part, not completely. And what they're doing is, well, what's actually happening to the earnings of these businesses? How confident am I that these businesses will be going next year? So you've still got a lot of bankers and corporate advisors shopping businesses around at similar values that they were pre-COVID.
Which is ridiculous.
Which is ridiculous. And you've got buyers going, we'll just wait and see. Not quite yet, thank you very much. So there needs to be a meeting of expectations, which often happens during a crisis where sellers want to keep high prices and buyers want to pay low prices. And how do you meet that in the middle? Well, what will happen as things get back to normal? There will be less purchase price paid up front. There will be an increase in earnouts.
Less purchase price paid up front. So, for example, if I want to purchase 10% of your business and I believe it's worth 10 million, so my 10% is worth 1 million, I'm not going to pay you the 1 million now. I'm going to maybe pay you 200 grand and I'm going to pay you the remaining 800 grand based on some key metrics being achieved?
That's right. It's less for investment, more of buying a company. If I want to buy your business, I want to buy your business and I'm saying, okay, you think it's worth, let's say, $30 million. And I'm saying, well, might have been 3 months ago, but I'm not confident that you're going to hit the same earnings. So I'll tell you what, I'll pay you 10 million up front. And if you meet certain profits, EBIT or EBITDA, or as I've just heard recently, there's a new type of earnings reference called EBITDA, which is earnings before interest, tax, depreciation, amortization, and coronavirus.
Wow.
Because people are saying, okay, what are the normal earnings today taking out the last few months? Because the sellers want to say, once COVID ends, this is what the business is going to look like. So this is what you should be paying. So on the earnout metrics, people are going to have to work harder after they've sold to earn their purchase price, because buyers aren't going to put so much up front. We're going to say, fine, if you earn what you think you're going to earn, then we're going to pay you more at the end of the day.
And so if I were someone selling my business right now, what would you tell me in regards to what to expect in the market?
I think you're going to have to be realistic with price, and you're going to have to be realistic with how much you're going to get up front. And you're going to have to be pretty confident about your business model, that it's robust, that you're going to be able to meet the next couple of years' earnings sort of thresholds or agreed points. So you're going to make the purchase price that you think, or wait. What's very common in companies are either share options, so employee share options.
So how do they work?
How they work is that if I'm your newbie employee, and you say, Paul, I want you to stay here for a while. So I'm going to grant you options that might vest over 3 or 4 years. So I don't get the full value of those options until I've stayed for 4 years. And if I leave before then, I may lose them all. And if I stay to the end, I've created some value.
So I can say, Paul, I'm going to give you 10% of CUB, which would be a ridiculously stupid amount.
No, I would. Yeah, you shouldn't give me that much. I'm good.
As my lawyer, you wouldn't advise me. I can give you 1% of CUB, which is going to vest over 5 years, which means.
Hang on, we were on 4. How'd you get up? You're a good negotiator. I thought you've already extended it out. You've already extended out for a year. That was very
it's going to vest over 6 years. On the 6th year, you will then have access to that 1%. But what does that mean? That means you formally own it? What does it mean?
That's a good question.
You can cash it out.
Well, it depends on how you want to play that. So generally, there are 2 ways of looking at it. So there's a US model that says when the options are vested, I should be able to exercise those options and become a shareholder. The right to know. The option gives me the right to subscribe for shares in your business. So I haven't got the 1% in CUB yet. You've just given me an option to be able to subscribe for 1%.
Okay, how does it work in regards to payment?
Well, depending on the value of CUB now, you may say to me, well, CUB is worth, let's say, $10 million. So I'm going to give you I want you to have 1% now. I'm going to give you an exercise price today of 1% of CUB, $100,000. But the exercise price is going to be $100,000. If at the time you want to exercise, you think it's worth $500,000, or often there might be an exit event that sells CUB as $100 million, then I'm going to get $1 million for my 1%. I'm going to pay 100,000
minus the 100,000.
Yeah.
Okay.
So I subscribe for 100 and I'll sell my shares.
So they don't have
for
to
$1
put
million.
the capital down, but when it sells, when the cash does come, they take that whatever
That's
it
why
was
it's
worth.
the option. Yeah.
That's the option to exercise it.
Yeah, it's the option to exercise.
And so that's obviously the more. Is that something you would encourage?
I would.
Employees to do more?
I would, because I think it gives people a feeling that they're on the journey to the equity. And if you are an owner of a business, then it makes you feel that you're on a journey, especially if the aim is to sell at some point. If your aim isn't to sell, then equity might not be as powerful,
as valuable
as it is. And then your choice is going back to when the options vest. And the US model is more let them exercise straight away. And you may be able to get a low exercise price, a zero exercise price, but let them vest, then they become a shareholder. Then you've got to look at your shareholders agreement, etc. Or you might go
Which you did ours.
We did yours. Or you might go for a more UK Australian version that says actually they vested now, that's fine, but you're not going to get your shares and cash out until I do. We're all in this thing. If you're there at the end game.
So you can choose whichever way you want.
As you draft the plan.
Let's say a Chinese company wants to come buy 20% of CUB or anything in Australia.
So how it works is there were different thresholds depending on whether they're trading partners from Australia, and different thresholds if you're in sensitive industries such as media or telecommunications. But for the average business, the threshold was, I think, currently 275 million. So still quite high. It's obviously big companies. And if you were over that threshold, you need to get the approval of the Foreign Investment Review Board.
If someone wanted to invest over 275 million into your business.
Yes, or buy the business or invest into it. Absolutely right. But now, at the start of COVID, that 275 million was reduced to zero.
So what does that mean? So if someone wanted to purchase any part of CUB and they weren't Australian,
if they're getting over 20%.
Over 20%.
Over 20%.
What would a company have to do? CUB would technically have to go to the Foreign Review Board and be like,
approval.
And why did they do that?
They were trying to protect the assets of Australian businesses while the crisis was going on, to not want foreign businesses or governments to pick off important assets.
For example, if the Australian economy plummeted, they don't want China or any other countries coming in, purchasing all our assets and then controlling our country.
That's absolutely right. Now,
that's pretty scary stuff.
I spoke to the Foreign Review Board, and I think internally they're putting a $10 million limit because they've got so many applications. But there's a lot of foreign
can't handle it.
There are a lot of foreign companies that would buy small businesses here from 2, 5, 10, 15 million. So they're putting an internal limit. They've told me that if it's under 10, they try and fast track it through. But if it's over 10, you've got to go through a foot of practice. And they used to have to, I think it was come back to you within a few weeks, but now they've lengthened that to 6 months. Wow. And that will put a real dampener on economic activity. So hopefully that will change, or they'll make that a bit more sophisticated moving forward.
And who is the Foreign Review Board? It's government. It's a government body.
It's a government. It's a government board or government organised board.